Wall Street posts a weekly loss after a choppy session on Friday. Fears of the Fed restarting rate hikes take center stage following the June jobs report, which reflects the U.S. labor market remains tight. All eyes now on the June inflation data due this week. Stocks in the Asia-Pacific trade mixed this morning, while the gift Nifty is indicating a slightly lower start for the Indian market. Chinese consumer prices unchanged in June, while producer prices also come in weaker than expectations. Oil prices rise around 3% on Friday to hit a 9-week high. Brent settles at over $78 a barrel as supply concerns outweigh fears that rate hikes could slow down economic growth. And Reliance will reduce share capital in Reliance Retail and make the subsidiary fully promoter-owned by paying shareholders 1,362 rupees a share. Reliance has also fixed the 20th of July as the record date for the demerger of financial services arm Reliance Strategic Investments, which will be renamed as Jio Financial Services post the listing. Reliance shareholders will receive one RSIL share with a face value of 10 rupees for each share of Reliance Industries held by them. And torrential rain brings a large part of North India to its knees. Delhi and Noida shut schools while offices have been asked to work from home. The Beas River overflows due to heavy rainfall in Himachal Pradesh, washing away roads, bridges and cars in the district of Mandi, while at least 20 people have lost their lives. Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are all of the top headlines that we have for you this morning as we kick things off on a brand new trading week. There's a lot to track, especially in terms of data that has come through from the global markets as well as what we're tracking this week. But first up, let's take a look at the Asian markets. You know, a lot of them have recovered in the past 10-15 minutes or so, so it's largely positive across Asia. We have Nikkei, which is in the red, around 0.7% in the red, but the rest of the Asian markets are doing just fine. So gains this morning led by the Hong Kong market. So the Hang Seng index is up 1.7%, over 300 points over there. You have the Taiwanese markets, which are trading with a gain of around 0.4%. So looking quite all right there as well. Kospi, not much going on, but around 0.25% in terms of a gain. Shanghai, similar. So, you know, largely positive start for the Asian markets, but it has seen quite a recovery in the past few minutes. The gift Nifty will be up for you as well. That is indicating maybe a little bit of a subdued start. We're around 24 points in the red for the gift Nifty right now. That's what's happening across Asia. But let's talk about the US and, in fact, the big cue from the US that we were mentioning, which is that non-farm payrolls, this is for the month of June, saw an increase of 209,000. So this is lower than the expectations that, you know, the street was working with of 240,000. So it was really the government hiring-led growth which we saw this time around, followed by healthcare, social assistance and construction. That's what came through in the June report. And the unemployment rate also has come in at 3.6%. However, wages grew by 4.4% on a year-over-year basis, which is slightly higher than what was expected this time around. We now have CNBC's Rick Santelli who's here to bring us up to speed with all of the highlights there.
209,000 on the non-farm payrolls for the month of June. 209,000. That is the lightest level, and I have to go on the way back quite a ways. That's the lightest level since December of 2020 when it was minus 268,000. If we look at manufacturing payrolls, they were up 7,000. The unemployment rate dropped from 3.7, and we all know that was the highest since Feb of 22. That was last month, to 3.6. So it moderated, but it's definitely still above the 3.4 that we had in April. And, of course, we understand that the unemployment rate is something that the Fed's going to pay close attention to. Average hourly earnings up 0.4%, hotter than expected, matches April. You have to go all the way back to July to see it up more when it was up 0.5. That was July of last year. And if you look at average hourly earnings year over year, they were up a whopping 4.4%. This is the new metric against inflation for many. It's the wage component, up 4.4%. It equals April. You have to go to February of this year to see it higher at 4.7. So even though it's come down a bit, it was 5% in November of last year, it is still definitely above the last several months, which was 4.3, 4.4, and 4.3, as you see. So we're hovering at that zone. And if we look at hours worked, 34.4, a tenth hotter than both what we were looking for and what was in the rearview mirror.
All right, Rick, thanks a lot for getting us all of those numbers. In fact, let's also listen into what Chicago Fed President Austin Goolsbee, as well as former Fed Vice Chair Alan Blinder, made of the jobs print this time, as well as their expectations from the Fed's next move. Listen in.
What the Fed's overriding goal right now is to get inflation down. We are going to succeed at it. And to do that without a recession would be a triumph. And that's the golden path. And I feel like we're on that golden path. If you take a step back, it's clear the job market is still very strong, but is cooling. If you look at the ratios of vacancies to the number of unemployed workers, for example, it's definitely coming down. That we're getting to a more sustainable pace, which is what we need to do for inflation.
You know, I think this is a very status quo, kind of boring report that you can take what you will out of it. The hawks will take that jobs are still over 200,000 and wage increases are not decelerating. They're kind of flatlining. And therefore, the Fed needs to push interest rates higher. The Fed, fortunately, is not forgetting about them. They're mentioning them. And everyone should keep that in mind. We're not yet at the point where we should be seeing really major effects of monetary policy on inflation, given the usual lags.
All right, that is some important opinion coming in. But here's another important voice, and these are reactions that we're getting from market participants on the June jobs report. So listen into what Goldman Sachs' Jan Hatzius as well as KPMG's Diane Swong had to say as well.
I think it's slowing gradually as far as employment growth is concerned, slowed a little bit more than expected, but that's the trend. However, still with an unemployment rate that is very close to the sort of 3.5% level that we've seen for well over a year at this point. So this report to me seems very consistent with a soft landing in the labor market. Labor demand is also decelerating. So to me, this looks like it's still quite consistent with a gradual kind of stabilization in the unemployment rate somewhere below 4%, with signs of inflation decelerating. Admittedly, in this report, average hourly earnings growth was somewhat stronger, but I think if you look at all of the different indicators, we're still on track for a gradual inflation slowdown.
Well, we've seen a bit of a slowdown out there. The ADP report is not a good forecaster of what's going on in the national economy. And I do think it's important to look at what's going on in some of what had been the drivers of gains. One of the biggest drivers of gains have been professional services, which has slowed down quite markedly this year. That had over 1.5 million more than February 2020 levels, now significantly higher than that. That is one of those sectors that saw a huge hiring spree and has now cooled off. So we're seeing some of those larger firms, which was really in the ADP report, was smaller firms are picking up the slack, where larger firms are now laying off workers. We saw that in the ADP report, and I think that's what you're seeing come out in the numbers as well.
Right, that is a lot of important opinion coming in on the jobs report that we got on Friday. But in fact, reacting to that, we also saw Wall Street end a volatile session lower. So the Dow saw a slide of over 180 points. The S&P 500 was down around 12 points at the close. And the Nasdaq, like you can see, saw around an 18-point cut. If you look at it for the week as well, all three indices saw cuts this week. So the S&P 500 was down 1%. The Nasdaq lost around 0.9% as well. And for the Dow, we actually saw the worst weekly performance since March. So there was a near 2% cut on the Dow. This is for the week. The street will now look ahead to a whole raft of, inflation-related data, which is due this week. So we have the June CPI print, which is going to be out on Wednesday. And then on Thursday, we have the producer price index data as well. So there's all of that to watch in terms of cues from the U.S. markets. But with that, let's also move on to the final update from our global market wrap this morning. We are actually getting pretty mixed cues from Europe. So the French CAC index was up around 30 points. This is on Friday. The German DAX index gained 74 points, but the FTSE did see a little bit of a cut at the close, around 23 points in terms of a cut. If you look at the stock 600, it was a pretty flat close on Friday, but for the week, we saw quite a significant cut. Over 3% is the kind of cut that we saw on the stock 600. And this is actually the worst weekly showing that we've seen in almost 4 months. ECB President Christine Lagarde, also in comments to a French newspaper, said that the European Central Bank will not stand idly by if there is a simultaneous increase in profits and wages given persistently high inflation in the region. So that is important that, came out of the Eurozone region. That is everything that we're looking at globally. So there's clearly lots going on, and we are going to assess how all of this really impacts our own markets. But before that, we're going to get into a short break. Stay tuned. We'll be back in 2. Hey guys, welcome back. You're still tuned into Power Breakfast. Now, like we were talking about the global setup, we did get a bit of a weak handover, right, from Wall Street. And on the back of that, you have the Asian markets which started lower, but a lot of them have recovered now. So the Hang Seng market is now up 1.3%. You have the Taiwanese index, which is, seeing a gain of 0.5% as well. Kospi is up 0.25%. Shanghai is up 0.25%. The only market which is really in the red for Asia is the Nikkei market. So that's what's happening in terms of the Asian market action. But let's bring in our research team now to help us with the trade setup and take us through all of the stocks that we should watch for in today's trading session. Nigel, Vivek, as well as Surbhi all join us now to prep us up for this trading session. Guys, a very good morning to you as we kickstart this brand new trading week. And Vivek, let me come to you first. Take us through all of the cues that, we should watch today. We were just going through the global setup, which does look a little bit negative.
Well, that's right. So talking about the handover, the USA markets actually ended with cuts in the week gone by, given the fact that most of the US markets have now started pricing in a rate hike, that will come in the coming FOMC meet. Now, talking about the European markets as well, European markets ended with gains on Friday, following cuts as far as the previous sessions were concerned. But, the Indian markets continue to be an outlier. The strength continues as far as the Indian markets are concerned. The markets did see a bit of a significant sell-off on Friday, pairing some of the gains that the market saw towards the first 4 trading sessions of the week. But despite the sell-off that we saw on Friday, Indian markets managed to end, the week with gains of well over 1%. Now, what are the key cues to watch out for, especially today as well as the coming week? Number one, as you mentioned, Asian markets seeing a bit of recovery. The GIFT Nifty 2 is something that we've now started tracking. That too is indicating a slightly positive start. But today, there will be a new listing, Cyan DLM list today. It'll be interesting to see the kind of action that this particular name sees, given the kind of strong action that we saw in IdeaForge, the listing that we saw last week. Also remember, AMFI will be releasing the June mutual fund data for today, and it's very important to track the kind of trends that we're seeing, especially as far as the SIP numbers are concerned. And lastly, earnings season will kick off in full swing. IT stocks will deliver their results, and that'll be something that markets, especially the technology sector, will be taking cues for, especially given the fact that TCS would be the first company the large cap company to come and deliver its results.
Okay, almost earnings season once again. Vivek, thanks a lot for bringing us all of those cues. But let's also bring Surbhi in. She's here to list out all of the stocks that we should really watch in today's trading session. Hi, Surbhi.
Hi, Pavitra. So the first one on my radar is Reliance Industries. The company has fixed July 20th as the record date for the Jio Financial demerger. The company will allot 1 share for every 1 share held in the Reliance Industries company. Next is Hindustan Aeronautics. They sign a 458 crore deal for 2 aircrafts for the Indian Coast Guard. HDFC Bank, the bank is going to sell nearly 2% equity in the NSDL IPO via OFS. Samadan Motherson, the company has entered into an agreement to acquire 100% stake in Rollon Hydraulics for an enterprise value of 77 crores. RVNL, the company emerges as the lowest bidder for an NHAI project worth 808 crores. And lastly, SpiceJet, the board is going to consider a fundraise on July 12th.
All right, Surbhi, thanks a lot for taking us through that entire list of stocks. In fact, speaking of stocks that we should watch in today's trading session, Z Entertainment is also an important one to, really focus on, because the Securities Appellate Tribunal is set to deliver an order on an appeal by promoters Subhash Chandra as well as Puneet Goenka against the SEBI's interim order. Remember, the securities regulator had restrained Chandra as well as Puneet Goenka from holding directorship or any key managerial positions in listed entities on account of alleged fund diversion at the entertainment. So this stock will definitely be important to watch in today's trading session as well. So that is all of the stock-specific action that we are looking at. But Nigel is also here to fill us in with all of the cues from the futures and options space. Good morning, Nigel.
Morning, Pavitra. Welcome back. In Friday's trading session, we had a bit of a breather and some sanity did prevail. Now, the FIs, we are pointing this out, that the net long positioning had moved to more than 1 lakh contracts on the long side. And that cooled off a little bit, and we saw some unwinding of longs and some addition of short positioning as well. I'll say that's healthy because this market was devoid of any kind of short positioning. So good to see some shorts getting into the system. On the option side, they bought more calls than puts. They bought close to 5 lakh call contracts, which was in the ratio of close to 2 calls for every 1 put. On the writing side, well, they wrote calls aggressively, and they wrote close to around 5 calls for every 1 put, telling you that at higher levels, we could be bracing for some kind of supply. Which brings us to the strikes, 19,400, 19,500 call. Both of them very, very active, added close to around 1.5 crore shares out there. So aggressive writing being seen out there, which brings us to the levels. Given that we saw such aggressive writing at around that 19,400 as well as 19,500 call, we're expecting resistance at around 19,500, 19,520, which is the recent high. On the downside, till that 19,000 level, 18,950 odd level to around 19,000 holds out, you'll say the long trend is still intact. For today, you'd want that 19,250 odd level to hold out. On the Nifty bank, 44,700 becomes a crucial part on the short on the support levels, because we have seen some bit of writing at around the 45,000 put. If that breaks, then you're looking at the 20 DMA. The Gift Nifty suggesting some green to kickstart trade. I think we'll get a bit of an intraday dip as well. Actually, now it's moved into the red. It's indicating a pullback of close to around 25 points. So let's see how this goes. Maybe at lower levels, buy on dips could work out, but good to see a bit of a healthy correction on Friday. Back to you.
All right, Nigel, thanks a lot for taking us through all of those cues from the futures and options space as well. With that, it is time for a short break on the show. But up next, torrential rain brings large parts of North India to its knees. We're going to bring you all of the updates on the other side. Hey guys, welcome back. You're still tuned into Power Breakfast, and let's now bring you some important global updates that we are tracking. US Treasury Secretary Janet Yellen wrapped up her 4-day visit to China. This is the second by a member of President Joe Biden's cabinet, and she called the visit constructive and said that the US and Chinese officials had a very substantive series of meetings on a wide range of issues. So we have CNBC's Sam Varas who's here to bring us all of the details. Sam.
So Janet Yellen had about 10 hours of meetings over in Beijing with these Chinese officials. They were described as direct and productive, as usual. No major breakthroughs or any sort of major deliverables, as widely expected, of course. There was a fairly low bar for these meetings, given what we've seen in terms of the tit-for-tat retaliatory measures last week. But at least what was successful for her was re-establishing this contact and strengthening this communication to try to avoid misunderstanding, miscommunication, which could veer into conflict. So Janet Yellen met with a number of high-profile Chinese officials, seniors, Premier Li Qiang, of course, meeting the new economic team, but also Peng Gongsheng, who's over at the PBOC, recently given that party chief role. She raised the issue of unfair trade practices, of course, a big concern over in Washington, also with regards to these new export controls that we've seen on these key metals which go into chip making. But she also reiterated once again that the US is not looking to decouple. She did say again that this would be disastrous, and she said that they do seek healthy economic cooperation. So China does appreciate this rhetoric in some way, and this goes to show that, she is, striking a pretty... It is a balancing act for Janet Yellen, but also for, of course, the Chinese. Li Qiang urged the US to work with China. They said that they can see rainbows after the wind and the rain. He said that they hope that the US can meet China halfway. But she also, of course, after these meetings, did meet with US companies doing business in China as well. There have been many concerns around the treatment of some of these firms over there. There are worries about these amendments to some of these espionage laws and also exit bans. The two sides very much acknowledge that they don't see eye to eye on a number of issues like trade, of course, and also with regards to technology. Right now, the Chinese side did raise their concerns about this potential executive order on investment curbs that could be coming in, but Yellen seemed to reassure them that this would be narrow in scope and transparent.
All right, Sam, thanks a lot for bringing us all of those important details. With that, let's also bring you some updates on the weather situation in the north. Torrential rains have wreaked havoc across North India over the weekend, so at least 20 people have lost their lives across North India as rains caused landslides in Himachal Pradesh, while Delhi too was brought to its knees as it received its highest single-day rainfall in over 40 years. Now, in the region, we've seen schools which have been shut, and work from home has also been advised for a lot of the offices in the region. This is across Delhi and Gurugram, and the IMD has now flashed a yellow alert. This is for the next 3 days. In the Himachal Pradesh region, 5 people were killed in landslides, while large-scale damage of property and vehicles was also reported as River Beas overflowed in the Mandi district of the state. The state government has also directed all schools and colleges to remain closed for the next 2 days. And in Uttarakhand as well, we saw 3 lives which were lost after a jeep which was carrying 11 pilgrims from Kedarnath fell into the Ganga amid a landslide near the Golar on the Rishikesh-Badrinath National Highway. So that is the situation that we are seeing in Himachal Pradesh and in Uttarakhand. Meanwhile, we also saw heavy rains in several parts of Punjab, which have led to massive waterlogging and flooding in low-lying areas as well. So that is really an update on everything that's going on across the north, the North Indian part of the country in terms of the weather situation. A lot of the advisories have been, put out. So please do follow that and do try to stay in. That is everything that we're tracking on Power Breakfast this morning. And with that, we are going to wind down on this edition with the news that most Asian markets are doing quite all right, but the gift Nifty is indicating a bit of a cut at the start, 25 points lower. Thank you for tuning in. We have Bazaar Morning Call up until